Well, after the markets closed today, investors turned their attention to Facebook, and its earnings did not disappoint. The world's biggest social networking site blew away Wall Street estimates. The company earned 42 cents a share, and after you strip out some one-time accounting items, that was a full 10 cents above the consensus forecast. Revenues were up 61%, yep, 61%. to $2.91 billion. Mobile ads, the big driver there. Facebook's share of the mobile ad market has doubled in just 2 years to more than 18%. All in all, a knockout quarter for Facebook. Shares of the company initially jumped in post-market trading, as you see on that graphic. They finished the regular session at $71.29. But one of Facebook's biggest challenges remains finding new revenue streams before its competition does. Julia Boorstin takes a look at what the company is working on now.
Facebook and Twitter are dipping their toes into online retail to tap into the $304 billion annual e-commerce market. Facebook is testing buy buttons in its news feed, and Twitter is exploring them in tweets, which may look similar to this, to enable consumers to buy without leaving the social platforms. But perhaps more important than retail revenue, this is about better serving advertisers.
You're increasingly seeing retailers, Amazon's increasingly advertising on Facebook. We're seeing more and more direct marketing dollars flow onto Facebook than really everybody thought, including the company, thought was likely to be the case 3 or 4 years ago.
Facebook is attractive to retailers not just because it has so many users, but because it has detailed information about who they are and what they like. Just like Facebook was a game changer for small businesses without a web presence, Facebook e-commerce tools could serve a similar role, giving small retailers an easier way to reach online shoppers. Analysts say Twitter is not as well positioned for retail advertisers as Facebook is.
It may be harder for Twitter to pitch itself as an effective advertising vehicle, even including the Buy It Now functionality. It'll be harder for them to make that pitch to advertisers, to retail advertisers, than it has been for Facebook.
But Twitter's working to correct that with multiple options, including a way for consumers to save deals to credit cards to buy later in stores, thanks to Twitter's just announced acquisition of payments company CardSpring. Facebook recently launched a Save Now button for articles, which it could presumably also expand to retail. Bringing social deals to brick and mortar has even bigger potential. 85% of all purchases are still made in stores. For Nightly Business Report, I'm Julia Boorstin in Los Angeles.
And if you don't happen to own individual shares of Facebook, some very big mutual funds you may own, and some popular ETFs do, and you may be in those. According to Morningstar, Fidelity's Contra Fund is the top holder of Facebook, followed by Vanguard Total Stock Market Index, the PowerShares QQQ ETF, the Vanguard 500 Index, and Vanguard's Institutional Index.